Welcome to the Theo video for Tuesday, February 23rd, 2016. I'm Jeff White, and today, we saw a very sensible, logical couple of moves take place out there from a technical standpoint in both stocks and bonds. Taking a look here at the daily chart of the S&P, we'll start off here looking at stocks, and then we'll move to bonds in a minute. But today, we're coming off a big day yesterday where the S&P rallied some 1.4%, and that's on the heels of a huge rally coming off of 1810. That was about a 7.5% rally into yesterday's high, give or take. And so, after this little false breakdown that we saw through 1810, okay, this little breakdown right here was very minor. This previous low was 1812 from January. And so, that low right here on the 11th of February, just kind of like a peekaboo low, like a now you see me, now you don't type of breakdown in the market. That was a false breakdown. We saw stocks recover moments later, really, on the heels of that OPEC rumor, you may recall. And then, of course, they just continued to rally very sharply here. Very modest pullback late last week, and then a return of strength on Monday of this week. So, we saw this low from January. We expected at some point a test was coming. We got that test, and price pulled back and actually briefly undercut it. But, it couldn't hold it. And so we saw a big subsequent rally away from that key support area, moving higher within the range. And yesterday, we came right up here to this prior high. That was at 1947.2, yesterday's high, just half a point shy of that. That's just about as close as you can get. And also less, 3 points and change here from this 1950 level. So we rallied also from obviously this major support test right into a major recent resistance. And so to see a pair of kind of the cleanest technical tests possible here taking place over the course of less than 2 weeks, one to the downside down here, and then of course one to the upside, with price in both cases responding basically immediately and kind of reversing away from those levels. The only question is whether or not this is just a little bit too perfect of a situation. So, if we look here at the intraday price action today, I'll pull up this chart here of the ES futures. Okay, this is up here in this upper window. I've got NASDAQ futures in the lower window. And, these little levels here, just kind of some intraday support that we were looking at here in the chat room, which was, flirted with a breakdown late in the day, but really no continuation there. So, today's declines basically took place here in the early going. We had a little gap to the downside and some continuation here early in the session, but then, we saw very limited additional downside from there. Basically, price just moved laterally for much of the session. We just kind of churned and chopped around, and so not a whole lot of intraday velocity and follow through on the heels of that weak start to the day. So we did make some early afternoon lows. We undercut some support temporarily here, but again, no real progress beyond that level. And so, you kind of wonder why, once we took that level out, why didn't we accelerate further? And, I don't know. We could, of course, from this point, see some kind of a reversal back to the upside. Of course, anything is possible. But, the key here is that we cannot count out the possibility of some kind of an upside breakout. So to see kind of this perfect scenario rallied right up to resistance, and now, of course, today we got the nice, quiet, orderly, sensible kind of pullback. Today it's very clean, very logical failure at resistance here. In this subsequent decline, it's almost, got a very proper feel to it. And, the only problem with that is that the market is rarely orderly and proper. I mean, it just is. It's an untamed beast by most accounts. And, beasts very rarely are going to toe the line and repeatedly respect that line, at least from what I'm told about beasts. But, to see this taking place, it's absolutely one of those scenarios that we can't let down our guard and throw out the possibility of a push above this 1950, possibly before a little bit deeper pullback is able to arrive. So let's take a look here at bonds, because moving on to these, really the other place today that we saw a very sensible, logical technical event occur was right here in the ZB. So we've been watching this uptrend line here going all the way back to early January, and maybe you're a little bit sick of seeing this. Truth be told, hey, I'm a little tired of it too. But eventually this is going to change. It'll cease to exist. We'll either rally away from it and kind of leave it in the rearview mirror, or we'll possibly move laterally or to the downside and undercut it, and then it will not be as important going forward. We'll have to turn our attention to something else. But for now, it is still very much in play, and as long as that's the case, it's got to remain front and center. If we look here though at the ZB, let me show you down here on this lower pane, kind of the intraday chart here. Early today, we got down here sub 164 in bonds, only to rally very sharply soon after. And so if I zoom in just a little bit further, you can see here intraday how bonds were able to really rally, and that coincided, of course, with this decline here early in the session with stocks. So prior to let's say kind of right in here, there was a little bit of decoupling that was starting to take place. Again, they moved very quickly, kind of right back in line, and resumed that inverse relationship that we've been looking at so much lately. So to see this gold level right here, that's that rising trend line here from this daily chart. Okay, it's the same level. So we rallied right off of that trend line, which is very much what we did here just a few days ago, having pulled back right into that uptrend line and saw a couple of days here worth of upside. And this trend line marks the pace of this rally. It's not the line in the sand that if price happens to move through it, that the uptrend is over. This is marking the pace of the rally. And so to see that pace still being respected, still present, until it changes, it still belongs on the radar here for us. So, looking here at the bond market, I mean, you've got to keep in mind that bonds dwarf the stock market. And so the best case scenario here for stocks is that bonds either level off here, or they happen to weaken a little bit in order to allow some of that money to flow out of bonds and possibly move into the stock market. And so, we either need to see one of those scenarios take place, or we need to see this inverse relationship between stocks and bonds kind of come to at least a short-term end. So for the two of these to become decoupled, where they're not really moving in inverse relationship the way that they have been lately, something's going to have to happen. And today's action certainly was not that way. So to see them kind of move back into their same relationship here as the day progressed, and to see bonds kind of going out near their highs and stocks going out right near their lows, it's still one of those relationships that remains very much on our radar. So for today, we saw this relationship continue. We saw a very valid technical test of this rising support in bonds. We saw, of course, between yesterday and today's back off type of move, this very valid test of upper resistance. And so, a pair of key technical events and kind of technical respect and all that was shown today in both of these markets. But, today could be very different from tomorrow. So in the meantime, for the strength in bonds, I mean, that remains a concern for the stock market bulls, as does this very important critical 1950 area that price is starting to back away from. So we will keep those things right smack dab on the front of our radar, understanding here that the bulls may have another little bit of a trick up their sleeve, but for now, they've run into a little bit of a ceiling here and starting to back away. And so we'll see if today's bar happens to inspire any buying, like we saw this last little dip last week produce a little bit of a bid for the market, or if instead we start to see a little bit more of an accelerated move to the downside and a continued move to the lower portion of this range. It's a long way down, but we're up here still kind of churning at the upper end and starting to initially back away. We'll see how things shake out in the days ahead. Thanks a lot for stopping by Theo Trade. Be sure and join us in the chat room tomorrow morning, and enjoy your evening.